Good evening, everyone. Welcome to Radiosilentplay.com. I am your moderator for today, Sunday, February 23rd, 2014. Okay, first off, let me start off with saying I am not a financial advisor. Please do your own due diligence before trading any stock or option. Trading stocks or options require lots of risk. Okay, so today I am going to do a video tutorial on how to use the website and trade our option setups. Okay, first off, you must log in. Log in with your username and password. You will come over here to where it says stocks and options. You're going to go to the drop box. You're going to click on option triggers. Okay, so usually I have these set up by dates. Okay, if I do not see any stock options, okay, nearby zones or triggers, okay, I will not post any stocks. We do not force or chase any trades. Okay, trading options is risky if you do not have any setup plans or any trading strategy. Alright, so what I mean by this is that, let's take a look. Back in January, okay, the way I set up these trades is we have an entry trigger. Okay, so BBRY, ticker symbol BBRY, BlackBerry, we had an entry from $6.97 to $7.30. So what that means is you're going to look to purchase this stock and accumulate any contracts for calls, alright, at this price range. Now your target is going to be target 1, $8.05, target 2, $8.50, and the potential long target of $9.50 with a stop close below $6.90. So if you enter this stock at $6.97, you're going to look to buy a strike price at $8. Okay, so you want to be close to in the money or close to your target for a strike. Now if that stock ends up closing below $6.90, that triggers your stop. So that means you're out with minimal risk. Okay, so let's take a look. I actually post the chart and why I'm actually posting this trade. So if you look here, we saw BlackBerry post a flag pattern. So what we wanted to do is add anywhere within this range. Okay, so our entry was $6.90 to $7.30. Our target was $8.05. Target 2 was $8.50. So let's take a look. We sent out this stock basically in January, beginning of January. So if you come look at the chart now, that stock, when we alerted it, was in this range. You could have bought in, okay, down here at the $6.90 range to $7 range. That stock hit a high of $10.50. So it hit our targets 1 and 2. Okay, so what I usually do when I do actually buy these stocks or send out these stocks, these are not weekly scalps. Okay, try to trade your option contracts anywhere from 1 to 3 months. Now premiums may be higher, okay, but there is less risk involved. Okay, so let's take a look at Target. We actually sent out Target January 7th, okay, for $62.60 was a trigger. Now Target had bad news on fraudulent charges on credit cards, and also they actually had some credit card numbers given to some hackers. So that stock didn't do well for us. So let's look at Target. Okay, so January 7th we entered the trade. Okay, if you look over here, our stop close was below 62.50, and if you see right here, we actually broke that close, and we would have stopped out with a small loss right here. So in these stocks, one of the reasons that we actually have these parameters set is so you can minimize risk. So this was a losing trade. In options, just be ready. You will lose on certain stocks. So what you want to do is you want to minimize risk and you want to maximize profits. That's why we have these set parameters. All right, now let's take a look at Ford. Ford, our entry was January 8th, anywhere from $15 to 80 cents to $16. Okay, and this was a stop close above 16, so we were grabbing puts with a strike price of 15, okay, and a strike price of 14, depending on your risk management and threshold. Our potential target was 13. So let's check out what Ford did after that mention. Okay, so you see we sent out this January 8th, and our entry was $15.80 to $16. And if you look here, you could have entered in this range right here. Okay, and that stock pretty much collapsed and hit a low of about $14.40. So that would have been a profitable trade. Now let's take a look at another stock, Cena. Okay, so Cena Core, we sent out January 9th, and that entry was $91 to $92.80, and our target was $88. Our target 2 was $85, and a potential target was $82. So what I saw here was we had major resistance at these levels, and this is what I call master resistance. So this was the setup. We were getting any option contracts for puts at this range, and our strike price was 88. Okay, so let's take a look at what Cena did. Okay, so just like that, Cena had resistance right here, and it dropped all the way down to $62.70. That would have been a real good profit, because that dropped early February down to 62 level. Okay, let's take a look at another one. Let's take a look at the USO, $32.50 to $33. Okay, we saw this reversal right here. You had a bottoming tail, a bullish reversal tail, and if you come over here, okay, you had that reversal tail right here, and that hit a high of $37. So we were entering the stock at $32.50 to $33. That would have been our trigger, and our target was met at $34. It hit a high of $37, and it hit our target 2 of $34, and it would have hit our high of $35. So that would have been a big profitable trade. So this is how we have the setups done on the website. And what we're doing is we're pretty much giving you set parameters so you could minimize risk. Okay, you have your stop, you have your target, maximize your profits, and your entry. Okay, and not many institutions, they're not going to give you these prices. You're going to get brokers, they're not going to tell you these ranges, they're not going to give you annotated charts, they're not going to show you why you're actually buying the stock. If you look at other websites, all they do is just post, and then when they post, they start posting whees and wows. The bottom line is that we actually use strategy. So that's about it. If you have any questions, just send me an email at miltonjero@gmail.com, or you can catch me on Skype. Alright, so so long, and I'll see you on the next video. Thank you.